Hello, everyone, and welcome to another episode of the Pineapple Podcast. Today, we have Maria and Aziz of Mac Investments. Now, the beauty with this couple is these guys are doing their 9 to 5, but they are making incredible strides and incredible achievements in the real estate space. So, we're going to to know them, we're going to know their stories, and we're going to find out how is it you can do both at the same time. Guys, welcome to the Pineapple Podcast.
Mitch, good morning. Thank you very much. Pleasure to be here.
Yeah, thanks so much, Mitch. Appreciate the invitation. It's a beautiful sunny day today, and we're excited.
Good, good, good. Well, I can't wait to jump into this. I mean, to me, your story is quite amazing because you guys are the ones that are focused on your 9 to 5, but you love the real estate and you're doing that at the same time. And this is often what I tell a lot of people. It's like you got to make a bridge plan. You can't just quit your job today and go into real estate. Your job actually enables it, and you're a clear demonstration of what it is you can do with that way. But I'd love to get a little bit of your backstory. Like, tell us what jobs you guys do, and then how did you find real estate as your love or your next vehicle for building your financial freedom?
Yeah, I think I can start with that. So just a little bit about ourselves as well first. We have two beautiful kids, Fatima, who is 21, and Adam, who is 15. So we're, a busy family of four. And they're at a stage where we kind of don't see them anymore, but it's we do our 9 to 5, yes, and we started. So Aziz is in broadband internet provider company, and I'm in clinical research. So it is a super busy schedules, very demanding as well. So, and we came across real estate back in 2018. We had actually just gotten back from our 5-year stint in Saudi Arabia.
Oh, very nice.
It was we came back 5 years later, and we had some decent amount of savings that we had reserved. And when we came back, we were after some consulting and learning ourselves, we decided to invest in real estate. Luckily, like we have my brother actually it has already had already had a head start in this, and with talking to him about it, we decided to take the plunge. And so we bought our first single family home in Oshawa, and just kind of like we didn't really educate ourselves in terms of like learning how to analyze a property.
Right.
We just kind of literally like just high level numbers, and with his help and support as well, we're like, okay, let's do it. So that's how we kind of got into it. And
I gotta say, I love that story. So the fact is, you actually had your brother already in the space. So what better recommendation, right?
Exactly.
Yeah.
So instead of getting the education, I guess we took the mentor kind of route. And
Right.
he was our mentor who kind of like led us through the process, because Aziz was the one who had already was working and he had the job, and I was kind of still figuring out my career when I got back after that 5 years.
Yes.
So it was a perfect opportunity for me to kind of like learn and get into the real estate side of things, and it truly became a passion after that. So we started off with that one single family conversion into a duplex. Learned the entire process of how to get the permits, lined up all the trades, contractors, all the materials, and went through the entire process. And after that, it was a rinse and repeat. So we used the BRRRR strategy, which we fell in love with, and
Nice.
kind of just did a cookie cutter. We knew exactly what we were looking for, and we repeated that like 6 times, and so it brought us to kind of like our base pretty
I
much.
love that. So you actually found your strategy quite early, I guess, because of the mentorship program, because that is one of the best ways to make money in real estate. The BRRRR strategy, for those of you who don't know BRRRR, maybe you can tell them, Maria, what is the BRRRR strategy?
Yeah, so the BRRRR is, you buy the property, you renovate it, you rent it out, you refinance, and then you repeat. So that's, you pretty much, how do you say it? Okay, you help me out here.
Yeah, no, absolutely. You're absolutely correct. Yeah, absolutely. So bottom line is, you're adding value to the property, right? You're forcing value
Right.
in two ways. One is, we're doing the renovations, but we're also adding a secondary suite. So when you do that and you follow the proper rules, is, work with the city, get the permits, then you tremendously increase the value of the property versus what you bought it for. And then you go to the bank, you refinance it at a much higher value, and that's how you pull out your capital, and then you use that capital to do it again and again and again.
That's absolutely correct. And what I love with the BRRRR strategy, as it's commonly called, in reality, it's one of the few strategies that you can employ whether the market is hot and booming or the market is in recession, as it is now. And it's really important that we unpack that a little bit, because when you force the value up on a property, that's where the income comes from, that's where sort of like you make the money. And the refinancing basically gets back all, sometimes more, if not at least a significant portion back of the capital you put into the building. So even in a recessionary climate, you have high rents. The banks will still refinance you as long as you can make the qualifications. So it is a strategy that's almost recession proof, because again, you can employ it. And as you rightly said, you've done that like 6 times. And I love that, because again, was it always in the Oshawa market, or did you do other places?
Yeah, most of them are in the Oshawa market, and then we have one in Hamilton as well.
Ah, beautiful.
Right.
Nice.
Yeah. So I think, and I think, Mitch, one thing worth adding, Maria did a great job of sharing our story, but why real estate in the first place? And one of the things when we came back, we actually analyzed our portfolio. We'd followed the Canadian way, right? We have a home, let's focus on paying off the mortgage, put our monies into RRSPs, TFSAs, into mutual funds. And coming back, we realized that we weren't getting ahead at all, right? Like
Right.
I didn't see ourselves retiring comfortably the way we envisioned it. And that's what really forced us to rethink how we invest our money. And hence, with the support of, the people we had around us, this is how we then took the plunge into real estate.
Love that.
And
Absolutely.
yeah,
please.
and just to add to that as well, it's our why was to just build wealth, so we can actually, our passion, our real why is to give back to the community, and in different ways. So yeah, in order for us to just depend on our jobs and save for like through RRSPs, that was not going to cut it. So that's how,
Yeah.
after doing a lot of research and learning about how it's helped all these other people to be where they are, like millionaires, like Rich Dad Poor Dad, and all those financial literacy books that we all know about. That's it's truly helped us for where we are at today.
Yeah, no, I totally agree with it. I see it myself. In fact, I've started a workshop now for business planning and development, and people are finding tremendous value, because without a plan, you really can't move ahead. It's just impossible. You get stuck, you follow everything, or shiny object syndrome. You can get caught up with everything, because everything presented looks great, but it may not be your thing. It may not work for you. But if you can actually get somebody that can help you get there and figure out exactly where you need to get to, then it becomes very doable, and then you can actually see the picture. So so like I say, that's a piece of what I do as well now, to help people push forward, and I'm happy to always work with people in that respect. So you're naturally demonstrating that. I think that's brilliant in you, because if you don't make that plan from early on, you're not really going to understand where you need to get to, you know? So now that you have the vision, you know that where you need to get to, you know that your current situation is not going to get you to the retirement lifestyle that you need. So tell us about, how does that reflect into your real estate strategy going forward?
Yeah. So as with the, obviously we started with the smaller duplex conversions, and as we all know, the market did take off, and so we generated good equity from the properties. And what we quickly realized is, with residential mortgages, which is what our duplexes were under, they were going to become more and more difficult. We always had to depend on our income to qualify for it. So this is when we got into more commercial residential real estate. So 6 units or bigger, where we can get commercial lending. It's more asset-based lending versus us having to qualify it personally. So then we got into 12 plexes. So we acquired our first 12 plex with partners in Moncton, in New Brunswick. And then quickly after that, we acquired a second 12 plex in Stellarton, Nova Scotia. So this is what, sort of our next step as far as scaling our portfolio and, getting out of that commercial mortgage space into, out of residential mortgage into commercial mortgages.
100%. I absolutely love that strategy. That's a space I'm in as well. And the beauty with that too is not only is the mortgage on the commercial side of the bank, so it's based on the building's performance. When you raise capital, even if you don't have the capital, you can raise the capital, but because it goes into your corporation that's acquiring the asset, it actually looks as an asset in the corporation and not a liability.
Correct.
In residential markets, as you could appreciate in the mortgage, the bank is okay, where is your money coming from? Where is that down payment? And is it in your bank for like 90 days? I mean, the fact that it's a ludicrous process is not for me to judge or you to judge. That's just a process, right? So you either with it or without it. But commercial, it's game changing because your debt is now positioned as an asset. The asset produces enough income to run the company profitably in the sense that the building rent is going to cover the mortgages. The bank has to have a certain number of dollars in the operating income and stuff like that. So brilliant strategy. And I love the size of building that you're starting off with. I think that's absolutely brilliant. And so were you employing the burst strategies in the commercial side as well, or were you buying them turnkey?
Yeah, no, absolutely. These are also value add opportunities. So, they were under market rents, dated as far as the conditions inside the units. So it was, again, we took the burst strategy and applied it to just larger projects, as you hinted to. And, actively we turned over the units, renovated them, brought the rents to market, and ultimately increased the net operating income, which increases the value of the property.
Beautiful. So, again, viewers are always asking, well, how do you get into commercial? Like, what is it you got to learn? What is it you got to do? Do you need a special broker? Like, how did you guys get into your first deal? Just as a sort of like some tips as to a new person wanting to get into that space.
Yeah, no, great question, Mitch. I think it comes back to how we started is, we work 9 to 5, right? So
yes.
How do we do all of this in the first place? It's because we've built a great team, right? We've done, gone to a number of networking events. We're part of some, certain groups and so forth that we're able to connect with great like investor-focused realtors, great brokers, mortgage brokers who not only deal with the A lenders, but the Bs and the Cs. So you have access to much more financing options. We have a great accounting team supporting us who understand real estate investing. We've onboarded a bookkeeper now who's helping us in the back end. So really putting that team together, I call it outsourcing. There's only so much we can do.
Yes.
We know what our goals are. We want to get there as quickly and efficiently as possible. And the only way we can do that is with a team. So back to the commercial properties, through our network, this is how we found the partners. This is how the deal was found, finding the financing, all of that just came together based on the network and the team that we had in place.
Love that. Absolutely. Because again, big lesson here, show up. If you really want to get into the real estate space, there's so many people that are there. They're willing to share. They're willing to connect. So once you start showing up, you can build those relationships. And then when you have a business plan, you literally can say, checkbox, checkbox, checkbox. These are the team people I need. This is the market I need. This is how I'm going to push forward, right? So I absolutely love that. I think that is an absolute nugget of information there. build your team, show up to the events, network, network, network. Sometimes you feel it's casual conversations, but you'd be surprised what can come out of it. You're
Absolutely.
definitely demonstrating that. So great job in doing that for sure. So now you have the team, you have the right strategy for you, which is the commercial side now. So what's in it for Mark Investments? Like, are you guys focused on multifamily now, and is it the Canadian market? Where are you with your business today?
Yeah, so we have, go ahead. Yeah.
Yeah, no, I think right now, what we're planning to do is just kind of optimize our properties, our current portfolio. And you know, we're looking into small development right now, and where one of our 12 units is, because there is some additional land that we can build on. So you know, just to kind of maximize the density of that area. And so yeah, we're looking into a small development there. Going forward, we're also, you know, looking into US, tapping into the US market. Aziz was part of a big multifamily in Atlanta that we just closed back in January. Yeah,
End of
just part of
December.
end of December.
Okay, okay. So I wanna build on that a little bit. To me,
Mhm.
that's quite exciting. First of all, congratulations. So you looked at your business model and you said, okay, the US makes sense for you to grow and to move forward, right? So tell us about the Atlanta deal. What exactly is the Atlanta deal?
Yeah, so again, back to network, and this is I was a co-GP. So this is it was a 122 unit townhouse complex in Atlanta, Georgia.
Beautiful. Yeah.
Um, and got connected, so the lead partner on that was Maria's brother. So he invited us to participate as co-partners, and we supported on the capital raise side. Again, same strategy. It's a BRRRR, so it's value add where rents are under market. We had to, the plan is to go in, renovate up to 80% of the units, bring it up to market, and ultimately increase the value of the property, refinance it, pay back our investors part of their money in about 3 years. And then the target is by year 5 or year 6 that either another refi or exit, in which case the investors are paid back, including their profits. So it's another burst strategy, but on another level. And I had, again, back to the strength of the network and the people we know. We learned a lot from the process. This was the first time that we actively raised capital for a project. Up to then we had just done friends and family as well as our own capital. But for this one, given the size of the project,
Yes.
it was a syndication. So meaning we had to raise capital from a large pool of investors. It's we closed December 30th, and now the asset managers are executing on the business plan as far as the renovations and property management and things like that.
Love it. That's absolutely exciting. I mean, congratulations. That's huge. And so is it that Maria, your brother, is the guy on the ground in that development, or is it you're relying on the team out there that you develop for the property management and the contractors and what have you?
Yeah, no, but my brother is in Ontario, like he lives here as well, is in Mississauga. And but as Aziz said, like the main sponsor is a US guy, and we have the team there. So the property management, asset management, everything is boots on the ground. There's actually a property management office on site as well at the property. So they're kind of managing the full renovations, getting all the contractors, the trades, everything in, and getting the ball rolling with the renos.
I love that. So, I mean, this is really key to a lot of investors, especially new investors coming in, and you're sharing it because you're literally a few steps ahead of many people, right? And so people would look to you as sort of like the leaders. How did you do that? One of the challenges I always hear people asking is, well, how do you rely on a team across border? There's first of all the accounting side. The accountant, like you said, you've got a great accountant, so that's his job, not your job. Your job is to find the deals and find the investors, bring it together. But a lot of people have fear because they're not sure how do you get the UST or how do you get across provincial team, right? I think you've said it well in terms of the networking. But what are some of the key indicators or the performance metrics that you'll set? Because that's a pretty big development, right? And if things go wrong in the development stage, that's where things can get bad. So how do you mitigate that sort of that management risk? Like what are the KPIs or certain things that you agree with the companies down there so that you are both on the same page?
Yeah, no, I think it's, day-to-day tracking. Obviously, Jose was just down there a few weeks back and meeting with the property management team, the asset management team, and they're actively executing the business plan. So there's weekly calls that they have with the various functions, tracking how rent roll is looking, what's happening with delinquencies, as well as lining up the trades and what was the estimate on renos versus actuals. So all of that is going to come into play. We just, again, the property just took possession December 30th. So right now it's sort of getting everything organized in place, preparing all the reporting, like you mentioned, what those KPIs are. But it's really just day-to-day tactical management until you get the rhythm going as far as the turnover and renovations and things like that. But I think the reality of it is when we talk about cross-border investing and concerns and so forth, it comes back to the team, right? Whether the team is 2 hours away or they're 2-hour flight away, it's at the end of the day, you need a team in place. You have to trust them, and you have to work closely together to make sure that you're able to execute together.
100%. I love that sharing because that is exactly what it is. And when viewers hear this from firsthand, then they get it, right? And you're sharing us information that we don't typically get on a day-to-day basis, right? Everybody's kind of at the higher level of make this happen, make that happen, talk to the accountant. But this is real. Like you're living in Ontario. Your brother lives in Ontario, and you're doing a massive deal in the USA. To me, that's structured for winning, right? And I think value comes from sharing the information as well. So is it that you're looking to focus your energies now in the US market, or you're still going to be sort of like, if the deal is right in Canada, I do it here. The deal is right in the USA, I'm going to basically do both markets.
So right now, one thing I'll share, Mitch, is we spent a lot of money on educating ourselves about the U.S. market. So we went for a couple of masterminds, and then obviously just connecting with people as we met them through the masterminds on really understanding the U.S. market. We invested heavily in accounting as well, so we're properly set up in the U.S. now with our own structure, tax IDs, things like that. So definitely, I would recommend to anybody, make sure you educate yourself as much as possible. You need to invest, and definitely the accounting side is very critical because Canada, US tax treaties, making sure you don't get double taxed, things like that all come into play. So you definitely don't want to shortchange yourself and invest properly when looking into the US. As far as our future strategy, Mitch, I think I can put it into 4 buckets. Mariyah mentioned we want to optimize what we already own in Canada, get the most value and use out of it. So that's actively happening. Number 2 is, we are more focused as far as future acquisitions in the US for a few reasons. One is just a lot more opportunity down there. The volume is just much bigger. Number 2, access to financing. You'd be surprised how much easier it is to get access to financing, even as a Canadian in the US.
Right.
I've actually been approved for mortgages in the US within 2 days, and not even providing official documents like what banks here expect.
Yes, that's incredible.
Yeah.
So the finance companies, they are ready to invest with Canadians. That's basically what the experience has been for you.
Absolutely. You may not get the same loan to value, for example, as a US resident or citizen would.
Right.
You get a little bit higher interest rate, but at the end of the day, none of that matters if the deal makes sense, right? So access to financing is better. And then if you pick the right states, then when you think about landlord-tenant rules, business-friendly environments, then it starts getting a little bit more attractive. because you see that you can really execute your business plan much quicker versus some of the provinces in Canada and even some of the other states in Canada, in the US, which are a little bit more challenging as far as handling tenant issues and evictions and things like that. It's nothing more frustrating than having a tenant not pay rent and you really can't do much about it. So those are some of the factors that have attracted us to the US right now.
Yeah, no, absolutely love it because you're right. And the sheer population size, right? We're just a tenth of the US market. So the US has their size of buildings, this operations, the scale is different. But I love how you pointed out the fact that, the rules are different depending on the state. So you can actually have a landlord-friendly state where you can provide good housing for people. At the same time, make sure you're optimizing your investment, right? Control states, as we experience in Canada, with the exception of Alberta, I mean, it's a tough market sometimes because you're really at the mercy of trying to build a business in a regulated market. And sometimes landlords can't put that extra investment because there's no way to recoup. There's no way to get it back unless you're paying for cash for keys and some of the other sort of creative landlord ways of negotiating, which means that they're putting additional costs into the business, right? So everybody wants to get beautiful homes, but nobody wants to ever pay for it unless you're in the right market or the right environment.
Yeah,
so I love that. Yeah, please.
Yeah, and part of our motto, like we treat all tenants fair. Don't get me wrong, we're not there to evict people on a for no reason. It's just when it does become challenging, when you're not getting your rents paid, when they're not taking care of the properties, that's when it gets a little bit frustrating, which is why we've kind of shifted our focus right now to the US markets.
Absolutely, and that's exactly where it should be. Right tenant, right client, because they're your customers. All businesses value their customers, but if somebody walks into the store and they're pulling down the racks or whatever, you ask them to leave, right? Yeah. You can't destroy or damage. It's got to be a relationship of, I'm a good landlord and I want to give you everything to live a quality life. You're the tenant. Enjoy it, respect it, pay for it, right? So I love that. Now, one other thing that I absolutely love was the fact that you talked about educating yourself and not being afraid to invest in your education. I love that because, as you know, that's part of my journey is actually in my education company as well, is to help people get to a better place in their real estate journey or their business journey. So the fact that you're sharing that, I think is brilliant because really and truly for you to move ahead, a lot of these things are not necessarily in a book. And even if it's in a book, you still need that connection. You still need that group. You still need to have somebody who's just a few steps ahead of you in order to pull you forward, right? And clearly you've done that as well. So what are some of the tips or the things that you felt you got a lot of value out of your programs in order for you to move forward?
Yeah, I mean, first and foremost, the more you pay, I found the more you get, to be honest with you.
Yes.
Right? If you're paying, if it's something free, it's you have to, I haven't seen as much value. Obviously the networking always helps, but the more you pay, the more you get. That's what I've found. And we've invested heavily over the last 5 years. Obviously, we started with Keyspire. Then now we're part of Synergy Mastermind, which is an incredible group of entrepreneurs as well that has really helped us go to the next level. And then, we did a couple of US masterminds as well. So really, what I strongly believe in though is in the room with the people, getting to know the other students as well as the presenters. I love the live in-person masterminds and training sessions and so forth. It makes all the difference. You learn, but then you also start building your network and are able to connect with them and then reach out to them afterwards to continue to grow and expand.
Yeah, no, totally. I absolutely love that for sure. Because again, it's people training, is giving back, and then you get the benefit. And you're right. The one psychology is whenever you pay money, you want to get the most back on your dollar.
And and also it kind of like when you have paid for something, it kind of pushes you to do, take the action as well, right? So you invested your hard-earned dollars, and you have to work back, you work hard at it to get it back. So you got to make the right investment, and yeah,
Exactly.
it will
That's
push you a
exactly.
little bit. Yeah,
Yes, because when you spend that dollar, you want the most out of that dollar,
exactly.
right? So when it's free, you don't care.
Yeah.
It's just psychology. But when you invest in yourself that way, you get out of it. The information is there, the knowledge is there, but you gotta want it, And when you put your dollar, it means you're serious.
Yeah.
And then when you put that dollar, you're saying, "Now I've put my dollar there, but you're gonna give me way more than what that dollar is worth, right? For every dollar I put in, I want to get $2 back, right?"
Yeah.
So, and value is measured by exactly what you're doing. You invested, you learned, and you implemented. That's success.
Yeah,
right?
exactly.
And that's an investment.
100%.
Yeah.
Yeah.
Action is key at the end of the day, Mitch, right?
Exactly.
Learn as much as you want,
Yeah.
but we know that at the end of the day, action needs to be taken.
100%, 100%. So tell us then, what's in the future for Mark Investments?
So I'll share my piece, and then Maria can speak to hers. So at Mac Investments, our motto is more to give. Okay, and the whole giving back component is really key to us. We love to give back. It's how we were raised as well, and we want to make sure that whatever we do in the business is for purpose. So, for example, today we give $10 per door per month to charity, regardless. So we consider donations as part of underwriting a deal now. That's a standard. For private lending that we do, a portion of that goes to charity. For any refi we do, a portion of it will go to charity. So we always keep that active, and automatically we consider it almost like an expense. We have to give back no matter what, just like we have to pay the hydro bills. One of the things that we're focused on for this year is to actually launch a financial literacy workshop for kids. I think one of the common theme, that we see how we grew up is the financial literacy, I think, can be strengthened in our education system today. Of course, the education system can't handle everything. They can't cover everything. The government can't afford everything. We get that. So what we believe in is almost like a public-private partnership. I think people like us, people like you, successful entrepreneurs can support government and the education system by coming in with our own sponsors and programs to sort of, add more to what we teach our kids. So we're actively right now working to develop and create a financial literacy workshop. We will focus on inner city schools and kids. Where like how I grew up, I didn't have access to that. We didn't have much by way of growing up. And if I had learned what I know now today, even 5 years earlier than I did, I'd be much further ahead. So I think if we can get it sooner into the minds of the youths, I think it's all for better. So that's a key focus for Mac Investments in year as far as the give back component.
Yeah. And it's exactly, we're on the same page with this. Like, we're working together as as an entity, and our goal is to make that happen this year. Yeah.
I love that. Absolutely. No, that's brilliant. I mean, that is exactly how we're going to develop a stronger nation, right? And we have to, we definitely have to value that as well. Same journey with me as well. We are focused on not only the people, but the people's children for the same reason. They have so much in them, but they don't know how to get to a better place, right? So they're still in the traditional system, go to school, get an education, get a job, and get going, when there's so much more in life now that you can actually access. So I absolutely love that. I think that's brilliant. Again, love the work that you guys are doing. So as we kind of close off, I know that you also love connecting with people as well. What's probably the best way to connect with you guys?
Yeah, best way is Aziz at makinvestments.ca, or Mariyah, Mariyah at makinvestments.ca. And
Beautiful.
of course, we're on Facebook, we're on Instagram.
Yeah.
Don't be afraid to slide into our DMs. And we love to connect. We love to give back. happy to, help anybody connect or teach, whatever you need. We're there for you.
Yeah.
Love it, love it. And I'll put your information in the comments below so people can actually click on it to have access to it for sure. So, guys, once again, on behalf of the Pineapple Podcast, I want to say a big thank you. I think you've given us a lot of insights and information of just how you can scale a business while still being in the 9 to 5, and that there's opportunities. Just invest in your education. Don't be afraid, because for every dollar you spend, you can literally get back $5 just from that program alone, right?
Absolutely.
So, but
And-
you've said the underlying thing. Take the action. Take the action. So, absolutely love it. Thank you so much. So, once again, folks, remember, hit the like and subscribe and notify button. Share this podcast with your friends as we continue to grow our base. And remember, it's all about being tough on the outside, sweet on the inside, and wearing your crown of gratitude proudly. Goodbye, everybody.
Thanks.
Bye now.
Thank you.